You're watching Dukascopy TV. I'm Elaine Stenson. Amid a political standoff in Washington, President Obama is set to nominate Janet Yellen to replace Ben Bernanke as head of the Federal Reserve. Yellen is the current vice chairwoman of the central bank and the frontrunner for the top spot after Larry Summers withdrew as a candidate. Rob Carnell, chief international economist with ING Commercial Banking, joins me on the line now. Rob, what qualities and attributes does Janet Yellen have to make President Obama decide to nominate her?
Well, I'm not quite so sure about Obama, because it seemed like she was definitely his second best choice after Larry Summers, who eventually dropped out knowing that he wasn't going to get the support from the Senate to do this. So perhaps the main thing in Janet Yellen's favour is she was going to get political support. There was already quite a strong movement within the Senate to back her instead of Summers. So Obama has enough fights on his hands at the moment with Congress. He probably didn't want another one, and Janet Yellen is a well-known quantity, and I think he probably thought this was the easiest way forward. Certainly not his first choice.
We've heard that Janet Yellen is more dovish than Ben Bernanke. With this in mind, what are the major changes she's likely to make?
More dovish, I think actually I would characterise very similar to Bernanke in terms of her overall stance. She's never deviated from Bernanke's view. What we do know about her is that she's been the brains behind much of what the Fed has been doing, both in terms of communication strategy and in terms of some of the other policy measures that the Fed has been dabbling with, in particular a thing called optimal monetary policy, which just basically means keeping rates on hold for almost the foreseeable future. I don't know that she's more dovish. I think personally I would say that she's pretty much a clone in terms of her policy stance to Bernanke, and I don't think we'll really see many substantial changes. Hopefully a bit more consistency when it comes to communication.
What are the other ways that we know that she differs than Ben Bernanke policy-wise?
Very hard to know at this point. That she's one of the things that she's going to be tested on, of course, is the tapering of quantitative easing. Now, that looks very unlikely to be started under Ben Bernanke, so she's going to be the person under whom tapering actually begins. We think probably no earlier than March of next year, possibly later. But she'll be taking over from the Fed in a very different part of the economic cycle to Bernanke. So, perhaps it's not right to try and make too many comparisons, given that the backdrop will be somewhat different.
In a speech last year, she argued that the central bank can achieve the best economic outcome by allowing inflation to exceed the Fed's target for several years to achieve a faster reduction in unemployment as long as longer-term inflation expectations remain in check. What's your view on this?
Well, it's a view that's not just shared by Janet Yellen. As famous economist Woodford has basically coined this notion that you can encourage at zero interest rates, you can encourage a better recovery prospect by making people believe that there's going to be a stronger inflation outturn in the near term, albeit there's a slight quirk here. You don't necessarily want to tell people that their inflation expectations shouldn't change. In fact, you really kind of do want them to pick up a bit so they start spending now and so they believe that real interest rates are lower. So there's a little quirk here, but it's a move in the direction of nominal GDP targeting, which is another one of these policies that's been talked about by central banks when their interest rates hit zero, but it hasn't really been put into practice. This is a sort of nod in the direction of that, so it'd be interesting to see her try and move forward with this, see whether or not it does work. We're in a period where everybody's experimenting right now. A bit of stronger growth, if it did result from this, certainly wouldn't go amiss.
How have the markets reacted so far?
Very, very difficult to tell because, of course, in the background we have the budget and debt ceiling debate, and I think that's probably dominating market movements. Although, of course, one of the things we saw yesterday, despite a big fall in the equity market, Treasury yields on longer-dated bonds actually held up reasonably well, and that may be because they view Yellen as a more dovish character. They maybe view the inflation outlook as being slightly higher under Yellen, but it is going to take a little time, I think, before we can see what the markets really think about this appointment.
And finally, do you think she will be as transparent as Ben Bernanke has been?
Well, Bernanke's made a big thing about transparency. The problem, I think, for Bernanke has been keeping a consistency with transparency. So, of course, he told us that they were likely to start the taper in September and then didn't tell us in the run-up to the September FOMC meeting that they weren't going to do it. So if you're going to be transparent, you need to be transparent all the time. And maybe the problem with Bernanke was not so much in that the policy was different to what Yellen will pursue, because after all, she is the champion of Fed transparency and communication. But the delivery has been somewhat inconsistent, and so we can't know in advance, but I guess the whole financial markets are probably hoping that we will get a more consistent delivery from the person who has basically instigated the policy at the Fed.
Rob, thank you for that, but that's all we have time for now. But in a related interview, Monica Gibson will be covering the USD currency pairs in her Targets and Focus interview, so do have a look out for that. Bye for now.